We have identified Ashok Leyland as pick of the week for this week. Ashok Leyland is a flagship company of Hinduja Group which holds around 51% stake in the company. It is the second manufacturing MHCV player with approximately 33% market share in FY19 and the largest bus manufacturer in India. The company has 6 manufacturing plants across 4 locations in India. Ashok Leyland has seen a good rally post seeing its low of sub 60 levels on back of arrest in CV industry decline and seeing 3 months of meaningful sequential volumes growth. We expect this momentum to continue with pre-BS6 buying coming into play in coming next months, driving further sequential growth and then slow ramp up of production of BS6 vehicles from April 2020 onwards. Ashok Leyland during this lean period has focused on cutting all the flabs in their costs and has managed to save approximately 230 crores in H1 FY20 and plans to save approximately 500 odd crores in FY20. While this has not reflected in EBITDA margin improvement this year due to negative operating leverage, it will certainly show up when the demand picks up and the capacity utilization becomes better. Moreover, Ashok Leyland is net debt positive and has improved its working capital requirement over the years and presents a strong balance sheet. Ashok Leyland covers approximately about 50% of the entire LCV segment opportunity and has approximately 22% share in this market. Ashok Leyland has planned to increase its LCV offerings to 3.5 to 6 ton LCV under the Phoenix brand and thereby double their LCV capacity from approximately 75,000 per annum presently. This launch of a range of customizable commercial vehicles will drive market share improvement in LCV segment and also aid exports growth. Government has taken strides in setting up the policy framework for scrapping of old vehicles and is devising incentive plans for stakeholders so that vehicle owners find it worthwhile in scrapping their old vehicles for newer ones. There have already been plans for few OEMs to set up scrappage plants of their own. The tentative deadline floating in the media for formal launch is stated to be around July of 2020. Nearly 10 million vehicles will be under radar for scrapping in FY20 and 25 millions by FY25. This may give a significant boost to demand. We reiterate a buy on Ashok Leyland with target price of Rs 97.